I'm going to teach you how to master supply and demand trading in 2024. So let's get into it. Huge giveaway announcement. I am now a part of the prop firm XO funding. So to celebrate my new partnership, I'm doing a huge giveaway. The first people that sign up with a 100K account or higher will receive a 200K account totally free while supplies last. The top 2 people to pass phase 2 of the challenge will receive $5,000 cash. And for the first person that reaches a payout, I'm going to fly you out personally, put you on my podcast, and give you $10,000 cash. This is the biggest giveaway that any Forex trader has ever done. But it doesn't stop there. If you use the code XO50 right now, you'll get 50% off any challenge of your choice. So good luck and God bless you. So we're coming up on the end of 2023 and I could confidently say I got the most people funded this year than every other trader on YouTube. And I only got 10K subs. So today I'm going to give you guys the steps that you guys need to take to master supply and demand and change your legacy forever. So first things first, you got to learn the basics of Forex trading. You need to learn market structure. This is very important. Market structure will make or break any single strategy. If you do not understand market structure, you will be lost in the wind. And don't worry, we're going to go over all of this stuff on the charts right now. Second thing is you need to learn about the candles themselves. What story are they telling you? What are they trying to let you know that's about to happen, right? Are they trying to let you know, hey, there's not enough buyers right here. We're going to be looking for sales. You got to understand what the story is telling you when you look at a candle. If it has a big wick to the upside, then we know that buyers are not really in the market right now. Sellers are a little bit stronger, so we need to be looking for sales. But these candle patterns only matter if it's in a zone that you're looking to place a trade. So if the whole market is trending down and you got a supply zone that you're waiting to get tapped in and you see a rejection candle, that's just an extra confirmation that your analysis is right and you should enter that trade. So figure out market structure, figure out candle patterns. Third thing is you need to learn how to find the trend of the day, right? What are we doing today? Does price overall want to go up or does price overall want to go down? You need to zoom out of your charts and really look at it and say, what are we doing today? Don't put too much thought into it. Just look at it and say, are we going up? Are we going down today? So now these 3 topics that I just told you are very important. You need to do as much research on these 3 things. Until you figure all this out, you are not ready for any one strategy. You need to figure out market structure. You need to figure out how to determine the trend for the day using the higher time frame and the lower time frames. And you need to know what the candles are saying when they're printing. If you see a bullish engulfing, we should not be looking for sells. If we see a hammer candle, we should not be looking for buys. And that's going to save you from getting stopped out early, right? You see a rejection like that and you're looking to buy, then you know, hey, it's not time for me to enter yet because we want to look for a bullish engulfing if we're looking for buys. And we're seeing this hammer candle, that's telling us that it's not ready to be entered in the trade yet. And this is going to save you a lot of money and a lot of headaches. So learn these 3 things and you'll be good. So now let's cover everything I just talked about on the charts. Okay, so this is the trade that I just took in the last video where I was up $14,000, right? So I really know what I'm talking about. So really pay attention. This could change your life right now. So first things first, market structure, right? Let's just take this back down and you can see everything that I was just talking about right here in this trade that I took live. So I zoomed all the way out the chart to find the daily trend, right? Let's not complicate this. We go on the 5 minute, we zoom out. We can obviously see overall the market is going down, right? We're going down. It looks good. We should be looking for sales. Right now, there's a lot more things that you need to be looking for, right? Don't just think you could zoom out and draw some lines and be like, okay, I got the trend. No, there's a lot more things you could look for, but this is just the basics, right? We'll move on to the more advanced things in a little bit. Okay, so we know that we're going down. So, okay, we're looking for sales. We want to make sure we are in our session. Right? So what you want to do is you want to get this indicator called kill zones, right? So I'm going to show you it right here. This is it. This is going to tell you when your session starts and when your session ends. I'm a New York trader, which I recommend that you trade New York session if you're trading supply and demand. Really, if you're trading anything, New York just seems like the best session to trade. Different pairs move better during different times. So if you're trading like GBP, you know, that's probably more London, right? But if you're trading USD pairs, you want to be trading New York. So we want to make sure we're in our session. The trend is going down overall. We have some strong supply pushes, right? We know that we're going down. It's obvious. Why would you be buying right here? There's no reason for you to buy right here, right? Do not complicate these things. One, we got the daily trend. All we did was zoom out and we said, okay, it's dropping. Number two, so now let's look at the market structure, right? And what is market structure? Market structure is basically lower lows and lower highs. So the price is going to come down, make a lower low. Then we'll make a lower high, right? This high right here didn't come past this. But this lower high is not valid. Listen to me when I say this. This lower high is not a real lower high until it breaks past the lower low. So once this lower high rejects, comes and breaks this and closes below, now this is a valid lower high. That is very important. It took me years and years to figure that out. This will not be valid. Right, so let me tell you what I mean. So let's say you just had this and this, right? Price came down to right here, right? Now you're thinking this is a lower high, right? This lower high didn't pass this, but no, it's not valid until we close below. So if we get a lower high right here, it comes right here, reverses. You try to enter your trade right here, you will be stopped out because this was a fake lower high. It did not close below it. So since it didn't close below it, it faked everybody out and then the real move came. Right? And now this would be the new lower high because it closed below the lower low. I hope that made sense. That was a lot of information to take in at once. Replay that. That is very important. That's going to make or break your strategy right there. All right. So now we know what lower lows and lower highs are, right? It's the same thing for higher highs and higher lows. We need to see it past the higher high. Okay. So look on this trade. We had the lower low, lower high. Right, it passed it, right? Now we got a lower low. So now we know that we're in a downtrend, right? This is a downtrend. No reason why we should be looking for buys. So now let's talk about the breaker structure, right? Very important. So let's say we have a lower low, lower high, lower low, right? And then price comes up here and breaks this lower low right here, right? If price closes above this lower low, now we have a breaker structure, right? So this would be the breaker structure right here, right? Because we're breaking the market structure. We were just in the downtrend. Now we're pushing up and we broke the structure. It's not supposed to do this. It's supposed to keep making lower lows and lower highs. Now this is an indicator once we break above that we're going to go higher now, right? So usually price will do this. It'll break the structure, come down where we get in, and then it'll push up. So breaker structure is very important. Make sure you do your research on that too, but that's basically it right there. You just want to be able to see it instantly without thinking too much about it. So just, do some research, back test, and just look at it, right? So we have a downtrend, we have a breaker structure, and now we're going to get into supply and demand, right? What is supply and demand in the first place? So supply and demand is basically how the market is moving, right? You see all these strategies, Fibonacci, support and resistance, all that stuff works, but it's not going with the flow of the market, right? And supply and demand does just that. So what is supply and demand and how do you locate it? Supply and demand is basically just momentum, right? That's what you want to look for, momentum. So if you find 3 candles, the same color, very strong candles, you know you got supply and demand. It's very simple. Do not overcomplicate it. Look at this right here. What is the supply and demand? Supply is going down, is selling. Demand is going up, buying, right? So if you just look at this, this is supply right here. 1, 2, 3 candles, the same color. You even had more candles, right? This is supply. What is demand? Demand right here. Multiple candles of the same color going the same direction. This is demand. You can tell, hey, this is a big move right here. The banks are getting involved right here, right? As soon as we came right here, we drop. So this is where the big money, the big fishes are playing. So we want to just hop on their wave and head to TP. Now you don't just want to enter a trade because you see that. You got to have other confluences. But I just want you to see what supply and demand is. So what's this right here? This is all supply right here. It's all supply. You only need 3 candles to be supply and demand. If you have more, great. It's even better sign. Now it can be 1 candle, 2 candles, but it needs to be very big candles. All right, show you some more examples. What is this right here? That's demand, right? Strong pushes up, same color candles. What is this? These 3 candles right here, demand. What is this 1 candle right here? Strong. This is very strong. It's bigger than every other candle. This is a supply push. This is a supply push right here. And so is this one right here. Supply pushes. And this one, right? These are big moves. It takes a lot to make the market do this, right? These are very important areas. So now that we know how to locate supply and demand, now we got to go over the gaps in the market. Now, this is something that I learned 3 years after studying Forex that I never knew about, and this changed everything for me. The gaps in the markets will change your trading career. So let's get into it. So what is a gap in the market? This is a perfect example right here. You see this space right here? This is a gap, right? And the way you want to locate a gap is you just want to pick out 3 candles where you think there's a gap, right? So right here, this is the first candle, second candle, third candle. And what you're going to want to do is get you a horizontal ray, put it on the first candle's bottom of the wick. If we're looking for sales, we're going for the bottom of the wick, right? So this is the first candle. We go all the way to the bottom of the wick, we put a line. Then we skip the second candle, go to the third candle, and we're going to go to the top wick and put another line. If these lines aren't touching each other, there is a gap in the market that needs to be filled. So basically what we're looking for is if this first wick isn't touching the top of this third wick, this needs to be filled, right? The market needs to come tap it and then move on, right? This is how the market works. There can be gaps in the market. It's basically against trading rules, right? Just think of it that way. If there is a gap, it's going to be filled. We don't know if it's going to be filled instantly or if it's going to take days and days and days. But just know every single gap needs to be filled. And let me prove that to you right now. I'm going to look away, go to some random spot, and I promise you the gaps will be filled. Okay, boom. Let's go right here, right? Starting from here. Let's look for a gap. Now, this is a little tricky one. Okay, there's a gap right here. Right, you see these candles? There's no gap, right? It doesn't look good, but you come right here and you start saying, oh wait, there's some space in between. So let's confirm together that it's a gap. So we get a line, we're gonna point out these 3 candles, right? Because we think the space is right here. That doesn't look right, right? It's too empty right here. You can go to the first candle before that space. You go to the top of the wick, boom. Since we're buying, we're gonna start off with the top of the wick. Since we're looking for buys, we're going to go to the bottom of the third wick. So remember, we skip the second one where we think the gap is, go to the third one, go all the way to the bottom of the wick. Draw a line. If these lines aren't touching, there's a gap in the market that needs to be filled. And what do you see? Comes down, gets filled, immediately pushes up with power, right? Immediately. Look at this. Look at this strength right here, this momentum. This is supply and demand. Now I'm going to show you later how to draw your boxes up. But this is how we would draw the box. You see it comes right here, pushes off strong momentum, straight to TP. Every gap in the market needs to be filled. I'll go to another random place. Let's go right here. Anywhere. Okay, now let's look for some gaps. Not seeing any gaps, not seeing any gaps. Okay, right here, we have a gap right here. So since we're looking for buys, we're gonna find the candle where we think there's a space, right? There's a space right here. We're gonna go to the first candle, put it at the top of the wick. Skip the second candle, go to the third candle, put it at the bottom of the wick. These lines aren't touching, so there's a gap. Price comes, has to fill the gap, right? We fill the gap, we push up. Simple. It's always gonna be filled. And you're probably thinking, why is that important? Well, we know that price needs to come fill this gap before going down. So let's say some traders might enter right here, right? Something like this. Maybe they're breakout traders, right? They put their line like this. You get a strong bearish engulfing. They're like, oh, I need to enter this trade. We're going to go for 1 or 2, whatever, right? But there's a gap right here. So price needs to come fill it. So now let's mark up the gap. Since we're looking for sales, we're going to go to the bottom of the first candle wick and the top of the third candle wick. They're not touching, so there's a gap and it's going to come fill it. Now, it doesn't mean that it's going to fill it and go your direction, right? You need a whole lot of other confluences before you know it's going to go in your direction. But what I'm trying to tell you is these gaps need to be filled. Boom, I think I proved it enough that gaps need to be filled. You can see right here because they're just back to back to back. We're looking for sales, right? Let me remove these so you don't get confused, right? Bottom of the first candle, top of the third candle because we're looking for sales. There's a gap right here, instantly fills, drops, right? Over and over. I could do this all day. Every gap, every single gap needs to be filled in the market. So now let's go back to present day. So now we went over market structure. We went over how to locate supply and demand zones. Now we went over gaps. Now we can start putting everything together to develop a strategy, right? So let's get right into it. So let's go to the trade I took today. We zoomed out. We saw that the market was going down, right? That's why I had them arrows right there. The market's obviously going down, right? We wait for our kill zone. This is our kill zone right here. Let me show you guys how to get this kill zone just in case you don't know how to get it. You go to indicators. You're going to type in kill zones. You're going to want the one by Oscar VS. You're going to click it. It's going to come up with all these different colors, right? London session, Tokyo session, New York session. What you're going to do is go to settings, go to inputs. You're going to turn them all off besides New York. And then boom, you got New York session, right? So that's basically how you get kill zones. Definitely use these, right? You only want to look for trades in this zone. So we know the trend. We know we're in our kill zones. We're looking at market structure. We're making lower lows, lower highs, lower lows. So we should be looking for sales, right? Now we're going to look for a gap in the market. Now we have gaps up here, right? We have gaps up here, but it needs to be at the beginning of a supply or demand push. We don't want gaps down here. We want gaps that start right here. We want the first gap in the push. Take notes of that. Very important. We want the first gap on a supply and demand push. We don't care about the second, third, fourth. We want the first gap all the time. You're going to see your win rate go through the roof. First gap right here. Since we're selling, we're going to the bottom of the first candle, top of the third candle. They didn't touch, so we have a zone. Now this is how you draw your box. You're going to get you a rectangle. You're going to go to the beginning of the gap, right? The start of the gap is the first line that we draw. Whatever you're buying, selling, the first line that you draw is where you start your rectangle box. So you're going to start it from there. And you're going to go to the swing high or swing low. Since we're selling, we're going to the swing high. What is the swing high? It's the highest point the candle went before it dropped all the way down, right? So just think of a swing high like this. Price is coming down, we swing up, and then we drop. This would be the swing high. Don't overcomplicate it. It's very simple. Price was coming down, it swung up, and then dropped and gave us our supply push. Now we got a swing high. Put the box to the top of that, drag it across all the way. I typically don't like taking trades after 8:30, but I took a late trade this time because I needed some extra money to go give back to the homeless people. So that's the only reason why I took this trade. You know, I'm really into giving back. So once we draw that box up, we have everything ready, right? So let's put this in replay mode. So once I would have seen this, this is how I would have had it set up. All right, so now that we have our setup, we're waiting for it to come tap in. Let's forward. Now, one more thing. Since this box is very big, this is a very big stop loss, right? I'm going to be entering on the break of the candle. And if the box is really big, I like to see it come up and at least fill halfway before I enter on break of the candle. Another gem right there. Another gem. This is only when the supply box is really big though. Okay, now we filled halfway. So now if we get a break of the candle, I will be happy to enter the trade. Okay, this would be the break of the candle right here. And you're probably asking, what is a break of the candle? Now we're getting to the advanced stuff, right? A break of the candle is, let's say you have a candle with the low right here, right? So the break of the candle will be as soon as the next candle comes and breaks this low right here, as soon as it passes it, we're not waiting for it to close. As soon as it passes it, we're entering the trade right here. So this is what your position would look like. This is exactly what your position would look like. 1 or 2 minimum. So as soon as we break this candle, oh, well, we would have entered on this one, right? Because it was the break of the candle. So this would have been the trade right here. Got some drawdown. Almost stopped out, and then TP hit. Look at this. Kept going. And that's why I made 14,000 on this trade. Because it was a big trade. I entered 2 positions. So this is it right here. That's exactly how I trade every single day. Now, of course, there's a couple more things that I add into my strategy that will help you know what zones are the best ones to use, right? Because you can't just go to any zone. But after years and months of backtesting, trading this live, I was able to develop a strategy where I could pick the highest probability zones to win, right? And get a high risk to reward. I'm going for a 1 to 2 right here, but you can see it was a 1 to 4 trade. That's how all my trades are. That's why it's easy to be profitable when you have a high risk to reward. This right here is what changed my life. So if you're a beginner or you're an advanced trader, this will take your game to the next level. Pay attention to what I'm saying. We're going to go over a couple more examples. But all these supply and demand traders you see out here trading, making money, they're all using this, right? They're all using this, so you can use it too. Now, I like to focus on reversals in my course. I trade reversals 90% of the time because that's how you get those high risk to rewards. But what I want you guys to do is really study this, use this in the markets, make you some money, and then buy my course so I can take you to the next level. But this will make you money today. Let's go over a couple more examples. Come on, man. I'm dropping gems out here, man. You just got to catch them. You gotta pick up what I'm dropping off. So let's just go to some random spots. Okay. This is consolidating. Not really much, but we can see it right here. All right. Supply and demand right here, right? Let's put this in replay mode so you can see everything that I'm seeing. All right. So let's go on the charts. This is what I'm looking at, right? First indication that a trade is about to set up. We want to see a break of structure. So get you a line. Every time you see a lower low and a lower high that's confirmed, this lower high is confirmed by this candle closing below these two bodies, right? That is a lower low. So now this lower high is valid. You take your line, draw it right there, hold shift. It'll make it straight. If this line gets broken, then I know I'm waiting for a trade to set up. Price breaks it. So once this price gets broke, we're going to ask ourselves, was this a demand push? Is this a valid demand push? We look back at it, same candles, all the same color, pushing up with momentum, definitely a demand push. So now we got two confluences checked off our list. This is starting to look like a good trade. Third thing we're looking for, did it leave a gap behind? Yes, it did. There's multiple gaps. There's a gap right here, right? But what did I say? The first gap, it's the first one we want. You put your trade right here, you're going to lose. The first gap. So we get our line, start of the gap, third candle, bottom wick, end of the gap, right? Space right here is not touching. This is our zone. Take your box, put it right there, draw to the swing low, which is right here. Now we got our box. Get your position, long position. Another thing I forgot to mention, you always want to put your position a little bit before the box because you don't want to miss out on trades. Because sometimes it'll come 1-2 pips right in front of the box, and then you will lose. You will miss out on that trade. So just put it a little bit before. Now, these are very big stop losses. What I don't like, usually I have very small stop losses. All right, so this is the position right here. 1 to 2 minimum, right? Now, let's see if we win or lose. I know I put this in replay mode, but I have bad memory. I can't even remember. Okay. Okay, so we did get tapped in. Okay, boom. TP hit, right? And look how far it goes. Look how far this shit went. This is a 1 to 8. This is a 1 to 8, bro. A 1 to 8 trade. That means you would have to lose 8 times after this trade to be at break even, not even losing. So this is why high risk reward is so important. Enough with this one-on-one stuff. It's not going to get you profitable. You have to win 90% of the time to be successful with one-on-ones. You start going to 1 to 3s, 1 to 4s, you could have a 30% win rate and still make a whole lot of money. So this is it. This is everything I showed you, right? Once you figure this out, you will be good. But make sure you know how to find out the daily bias, right? There's tons of ways to figure it out. You want to look at the higher time frame. See what is it doing on the higher time frame to tell you that it wants to go up overall. You want to look at the 5 minute. What is the 5 minute marker structure telling you? What are the candles telling you? Look at the candles. Remember I was talking about candle patterns? Look at this candle right here. Let me delete this. You see this candle right here, right? This is what you call a morning star. Whatever you want to call it. I don't remember the names. I just know what they look like, right? You see this huge rejection right here? That means sellers pushed the market all the way down here. And then right at this zone, right in our demand zone, buyers came and pushed the market up. So the sellers lost. Buyers took over. We make money. That's how it goes. These candles are very important. Now, if you would have got this candle closed inside of this box, then you have to be worried. Then I'll be wanting to enter on break of the candle, because this is a very strong indication that sellers are in control. You see, you get this rejection, immediately it's a different game, because it lets you know, the market is gonna let you know what's gonna happen. Same thing right here. Look at this rejection candle. You see how it's the exact same thing as this? Pay attention, bro. I'm putting you on game right now. You see how this candle is the exact same one as this, and what happens after it forms? Market pushes up with momentum. Pay attention, bro. Pay attention. Same candles. Why does that keep happening? It's not a coincidence. I'm trying to tell you guys, there's secrets in this stuff that you got to figure out. Same thing right here, but it's looking for sells. Drops. The market drops. Same thing with this candle. You see this? The market drops. Same thing over and over and over. Candle. Same candle. It drops. I'm trying to tell you, right? But these candles only matter if it's at a zone, right? All these candles are at zones. Look at this zone right here. This is support and resistance, right? We get that candle, it drops. Right here, this is kind of like a supply zone right here. It didn't quite tap it, but you know, we enter a little bit before the box, we would have caught it. So all these candles mean something. Look at the same candle, drops. So that's all I got for this video. Go use this right now and tag me on Instagram when you get some results. I'll see you guys next time. Peace.